I want you to think about the last time you got completely faked out on a trade. You saw the setup, price broke above resistance, you got into the trade, and then you got absolutely destroyed. And right after the trade, you're sitting there at your screens wondering, what the heck just happened? This used to happen to me basically every single trade. I would see these beautiful setups, I would get into the trade, and then it would just completely reverse on me and absolutely destroy me every single time. I couldn't figure out why some trades and why some breakouts worked and others just completely failed. Then I learned how to look at volume correctly, and that's when everything changed. Because the difference between a real move and a real breakout is volume. And the difference between a move that's going to continue and have continuation and a move that's going to completely collapse. Here's the thing that most traders don't understand. Price action can lie to you, but volume never will. I ignored volume for the first 2 years of my trading career. I thought it was just a random bar at the bottom of the screen, but the moment that I started to have a deep understanding of volume and using it to confirm all my trades is when my win rate absolutely skyrocketed. Now in episode 4 of the swing trading series, I'm going to show you exactly how to confirm every single breakout and every single move in the market by using volume. Once you understand this, you're going to trade with a completely different level of confidence. So let's get straight into it. All right, guys. So in the 4th episode of the trading series, we're going to learn one of the most important and under talked about factors of trading and how stocks actually move. And this is going to be volume. You have to know how to read volume because institutions cannot hide volume. Institutions are the ones that move the market. Think about banks, think about hedge funds, think about whales. Anybody that has enough money to move the market. This is not going to be somebody's aunt just randomly buying 10 shares of Tesla. This is going to be institutions that have billions, millions of dollars to deploy into the market that move the market and leave over what's called a footprint. And this is something you could start to see within the volume. And just like a stock has patterns that we've talked about, volume also has patterns within the volume kind of look itself. Now, the most important thing is make sure to go on your charting platform and add any volume indicator. What I like to use is just the normal volume indicator on TradingView. But what I do is I go to style and I add a volume MA. What this is going to do is basically going to show us the average price of the volume. So what was the average volume over the last 20 days? And that way we can see when the volume becomes higher than normal. Now, for this example, I literally only have the volume pulled up and I want to show you guys how patterns start to emerge within the volume. So right here, for example, in the middle of my screen, you could see this stock had very nice green volume and the green volume here was very, very high. Now, notice how right here, the stock ends up having very low volume and it's kind of like declining for a while, but it's all red. So all the red bars are declining, the volume is going lower, and then the volume comes back in again and it's very, very high, but it's green. Now, imagine what the stock is doing. You don't even have to look at how the chart actually looks like, but I want you just to imagine and think, what is the stock doing if the volume patterns look like this? If you guess going up, that's the correct answer because just like a chart pattern, a stock and the actual volume of the stock has a pattern as well. So when a stock is green on high volume and it makes a big move on high volume, that is generally a bullish thing. When a stock pulls back or reverses a little bit, that is generally something you want to see happen on low volume. The reason why is because that shows you that institutions did not sell the position. Because imagine, institutions start to buy right here. This is why there's so much volume, right? This is an institutional footprint. If the volume is high as a stock pulls back and it has red days, that means that those institutions are either selling or they're getting out of their position, or it's many institutions kind of battling between each other, but it's not a big accumulation print that's being left over. That is how you know a stock is going to reverse. If the volume is low, that means the stock is likely to pull back. And if the volume comes back in, now you know there's a new trend that's happening within the stock. And this is called a volume pattern. Now, I want you to notice something that ends up happening later on, right? So we had the first volume pattern right here. We had high volume as the stock was green, low volume as the stock consolidated, high volume as the stock was green, and then lower volume as the stock started to consolidate again, higher volume as the stock was kind of, going green. But then notice the volume patterns start to shift a little bit. If I draw a line right here, right now, every single time the volume is above this line, it's pretty much on the red side. You can see we have red volume right here. When there's green, it's pretty low, right? And there's red volume right here, red volume right here, right here, right here. Now, what do you think is happening during this period of time? If you guess the stock is going down, you're completely right. So I just want to show you guys the chart of what was going on here. You could see this is the initial move that happened. This is called an ignition move on volume. We set up in that staircase pattern, low volume consolidation, high volume move up, low volume consolidation, high volume move up. This is exactly what you want to see in a trend. But notice when the stock starts to top, what happens? Look at the volume, right? This is institutions starting to sell out of this position that they originally accumulated. And you can only tell that by looking at the volume. When the volume is high on a sell-off, that tells you that institutions are selling out of the position. And this is probably going to be a reversal. And then from there, you can see the trend actually becomes to the downside, and the volume is very high every single time the stock goes lower until, notice what happens here, the volume profile changes. And now the patterns are actually leaning bullish. You can see this stock ends up going higher after the volume patterns change. Now, we want to make sure we use volume as a confirmation tool. Volume is the actual confirmation of what price is doing, because price is the truth. Just because volume is going against what price is doing doesn't necessarily mean that price is wrong. Price is always going to be the truth, and that's one thing I want everyone to understand. Price is going higher and the volume isn't supporting, it's still going higher. There's nothing we can do. We can't control that. But what we can do is confirm our trades using volume. And this is the main way that I personally use volume, as well as finding some of the best stocks that have some of these volume patterns that end up happening. So what I usually like to look for, if I'm looking to long a stock or look for some of the strongest leaders within the market, if I notice that the volume starts to go high, and then whenever the stock pulls back and sets up into a tight pattern, the volume goes lower. Now I know that there's a good chance that the next leg up, if volume returns, is going to make an absolutely massive move up. You should be incredibly bullish if you see these patterns start to set up on a stock. Now, every single time a stock starts to consolidate and set up within the staircase, and this ties into our trends, you can see this stock right here is riding this kind of EMA up. It's setting up within the staircase, exactly like what we talked about last episode. You want the volume to actually be decreasing. This is called volume dry up. So basically, demand is drying up, but supply is not increasing, because if supply was increasing, it would reflect within the volume. This is exactly what you want to see, because new inventory, new demand is going to be driven up as the moving averages catch up to price. And this is called a consolidation that turns into an expansion, which is where the really big move in a stock happens. So you have the big move up right here with a lot of volume, and then low volume consolidation. That's exactly what you want to see. Then you know as the volume starts to return and the volume kind of gets high back above the cloud again and the average, that a big move is going to happen, and that's supporting our breakout. So if the move and the breakout is starting to happen on higher volume as the stock kind of moves up, that is supporting and it's confirming that the move higher is likely going to take place. Now, another way to look at the volume is on the bigger time frames. I usually like to use a daily and the weekly, but stocks move in stages. They don't move just straight up, straight down. We already talked about this. They actually move in 4 cycles. So the first cycle of a stock is going to be a consolidation. So something like this. And this is called accumulation, where institutions are accumulating a position, right? The news on the stock becomes better and better and better until it sets up a massive run. This is going to be our stage 2. So this is going to be our stage 1, where we have accumulation. Stage 2 is going to be the biggest kind of part of the rally, a massive move in the stock. And then stage 3 is going to be when the stock starts to top out and the volume patterns start to show some weakness. And then stage 4 is going to be the very big move to the downside that occurs after that. So you have stage 1, 2, 3, and 4. Now, understanding this is important, because once the stock starts to enter a stage 1 base like this on the weekly time frame, you could start noticing that the volume patterns start to shift from a very high sell-off to now accumulation starting to take place. And this is how you know that a stock is ready to start moving. Whenever you start seeing these accumulation patterns, usually a good sign that this wants to break out. Obviously, we're not just taking it because it has good volume patterns. We want to wait for a pattern on the chart. We want to wait for the breakout to actually occur. We want to wait for the momentum to come into the stock, but this is giving us signs to watch this name and watch for the accumulation to happen. Now notice what happens on this stock. This is Carvana. It was at $3 here at the lows. The volume starts to come in. It sets up in a nice kind of inverse head and shoulders base, or a little bit of like a cup and handle base, whatever you want to call this. And the volume patterns start to show accumulation. This means institutions are buying in, ton of volume on the buys. There is almost no sells at all that are any high volume. Now notice again, the volume is increasing. The only time there's high volume on the stock is on the buys. There is almost no sell volume. Obviously, it enters a little bit later down the line, but as it starts to make a big move until really about $200, there really isn't much sell volume. Now, notice what happens as the stock starts to kind of make its stage 3 base. You guys see that? Do you see the volume pattern start to completely shift? Now, instead of very high volume to the upside like we had here on the left side of the chart, it's actually the complete opposite. So when the stock is red, the volume is red, right? This is telling you that these institutions that bought here or bought here are now selling some of their positions, and this is called distribution. So they're distributing their shares to retail holders or to anybody else and taking profits on their positions, and you could see that within the volume. The volume is super high as the shares are being distributed, and now this stock is likely entering what's called a stage 3. So this was stage 1 right here, this was stage 2, this was stage 3 right here, and then this was stage 4, then it went stage 1 again, stage 2, now it's probably in stage 3 going into a stage 4, and you could see that by the volume patterns. Now this isn't the only stock that did this. You could see we have the ticker hood right here on the weekly chart. Notice how this set up in a massive stage 1 base as well, and look at the volume patterns. Every single time this thing was getting bought, super high volume, not really a lot of selling until obviously later down the line, and this was telling you that institutions were accumulating and you could have bought a position either on the retest or the breakout of this big weekly base. Now, this works the exact same way to the downside, and this is how you know if a stock is actually reversing or if it's just pulling back. If you start to see volume like this off the highs, if you start seeing that every single time the stock sells off, the volume is very high, and every time it gets bought up, the volume is pretty low, that usually tells you that a big downtrend is going to happen and a big reversal of the trend is going to occur. So in this example, you could see this stock right here started to make a pretty big move down, and notice the volume, right? Before, there really wasn't that much volume on the sell side, really until kind of like this move down right here. It was pretty high on the buy side, but then everything switched right here. And every single time this thing sold off, look at the volume, right? A ton of volume on the sell, almost no volume on the buy. Every time it kind of tried to get bought back up, the volume was incredibly low, but the volume on the sell side was incredibly high. Of course, you have sometimes right off the lows that buyers will step in, but overall the volume is dominated by the sellers, and that tells us that this is in a downtrend. Now again, just knowing that doesn't necessarily tell us to potentially short. We want to understand the context of the chart. What I usually like to look for is that setup we just talked about. So a high volume sell-off, this is called our ignition candle, and then we want a low volume pullback or a move up on this case because we're looking to short, and then a high volume move again. So basically what you're looking for is an ignition candle, which means one high volume candle. So for this example, it would be right here. You want a sell-off to occur first, so the move to kind of get ignited, and then you want low volume as the stock sets back up within the direction of the trend, and then high volume again as the stock moves within the direction of the trend. So that would be your example for the short side. Now you could see for the long side, this is how this would look. So you could see you have a big move here on volume. This stock consolidates on almost no volume right here, and then again, as the stock starts to break out, notice how the volume comes back in and it makes a massive move up. Now, more than just the daily time frame, we could use the volume patterns on lower time frames as well, specifically to confirm our entries. So for this example, you could see Nvidia here is setting up in a massive weekly base, and it looks like it's starting to break out. So I want to go on the lower time frames to see how the volume looks like. All right, so notice when I come down to the 5-minute time frame, you could see this is our level that the stock needs to break above. It starts to break above this level, and notice what happens with the volume. It increases, and not only does it increase, it's beyond its opening candle. So keep in mind, when there's volume in the market, usually the volume comes in the morning and at the end of the day. The reason why is because this is when most orders come in, especially with institutions, and it's the most liquid period of the market. Now, most times what you'll see is the open will have the most volume of the day. But when you see a period of time when there's higher volume than the open on a stock, especially through a key level like this example right here, this is what I call a volume anomaly. And a volume anomaly basically means you have higher volume than the open at a time of day that is not the open, of course. Now, whenever this happens, this confirms that there is massive orders that is coming in, and the stock usually makes a massive move when it breaks a key level with the volume anomaly. So for this example, you could see we have the open volume right here on Nvidia, pretty high, but then right out of nowhere at 940, the volume is much higher than the open, and it breaks through a key level. This tells you this thing is going to absolutely run. And you could see from there, it never came back. It just ran. And this thing went on an absolutely massive run over the next few months, just continuing to go higher and higher because of the fact that the breakout was supported by volume. So everything that we look for needs to align within the volume, and the breakout needs to have that volume for stocks to make massive moves up. Now, going back to the lower timeframes and understanding how to use volume on the lower timeframes to know if a reversal is going to happen, you can see I'm on this ticker right here, RCAT on the 5-minute time frame. Now, this thing made a massive move off the morning. Notice that. Massive move. But what ended up happening was, look at the volume at the high, right? Institutions started to sell right here, and then this thing started to pull back. We usually want to see the pullback on very low volume. It needs to be controlled, very low volume. But notice what happens here. This thing actually pulls back on high volume the first time. It kind of consolidates a little bit, but then notice where the volume is coming in. Sells off on high volume right here. Sells off on high volume right here. Sells off on high volume right here. The stock can't go higher if the volume is clearly pushing this thing lower and institutions want out of their positions or they want to distribute their positions. The volume has to be coming from the buy side the whole way through. Here's an example of a stock that went up the whole day. Throughout the day, you could see the volume patterns on the 5-minute time frame. Of course, right at the open, you have some pretty high volume right here. As the stock started to go up, you could see you have some nice volume. As it pulled back, notice how the volume just continues to disappear. And there's no big sell volume bars, right? If anything, the volume is actually on the buy side. And then as it consolidates, low volume. Buy side, low volume. Buy side, as it moves up, low volume. This is exactly what you want to see, and this is how you know a stock is likely going to trend the whole day. Using these patterns, you can use them on the daily time frame, on the weekly, on the 5-minute time frame. There's so many advantages to reading and knowing how to read volume the correct way, because if you know how to read it the correct way, you can have a ton of different confluences to your entries. You can know exactly when a stock is going to reverse, and then everything will basically put itself together whenever you're taking a breakout or whenever you're buying an undercut and rally, which is things that we'll discuss in the next episode for entry criteria. And that way we're going to have that extra layer of confirmation for whenever we're going to enter the trade. So we have complete confidence whenever we see that volume kick in. Whenever you have a break of a key level, you want to make sure that there's volume before you enter. So when a stock breaks out, volume needs to confirm. If the volume is low, that means that the breakout is likely not going to play out. If a stock is reversing, it likely needs to be with very high volume. If a reversal is actually occurring, high volume is going to be there. So if a stock reverses off of the low and wants to go back up, you need to see high volume off the low, indicating that buyers are stepping in. If a stock is going to reverse off the high and make a reversal and reverse the trend, there needs to be high volume off the highs, and that confirms to you that a reversal is likely occurring. Now, if there's just a pullback within the trend and the trend continues to go higher, usually those pullbacks need to be on lower volume. If the pullback is on lower volume, that is telling you that the stock is likely continuing to take course on its big trend. Now, if you can look for that ignition, low volume, and then continuation move, you can absolutely print within the market. This is exactly what you need to be looking for in all your setups. And as we get to the scanning episode and identifying our A+ setups, you can start to piece this together and really look for those volume patterns to set up. So you want the stock to make a big move up, you want it to consolidate on low volume, and then you want high volume continuation, or to buy it before it has that high volume continuation to be set up for that big move on the staircase break. All right, so I hope you guys enjoyed this episode. Next episode, we're going to talk about my entry Bible. So you're going to know exactly how to enter any trade, no matter the market environment, and have an edge in this market. I'll see you guys all in the next episode.